Boy, the FOMC was a snoozer this week, but we have a big weekend coming up, and I've got Jim Welsh from Macro Tides to break it down for you. Jim, how are you?
I'm good, Blake. Hope you are doing well.
I am. Excuse me. I am. I actually feel good. I don't know what happened there.
Yeah.
I don't know where the frog in my throat came from. Anyway, no, I'm doing great. It's been a crazy week. It's Seems like since the Trump administration has been in the last couple of weeks, it seems like it's crazy day almost every day. But we're creeping up to that. Well, tomorrow's February 1st. Many of you will be watching this on the 1st, if not the 2nd, and you're probably getting news whether Donald Trump and the Trump administration have imposed 25% tariffs on Mexico, Canada, blanket tariffs across the globe. I mean, Jim, how are you reading all this? Well, I get actually even before we get into that, you should tell us how you feel about the Fed too. So let's do that first.
I love the Fed. I think, again, the December summary of economic projections, we've talked about this, showed that they thought inflation would be 2.5% in 2025. That was up from 2.1% in September. So, from the Fed's point of view, the prospect of tariffs are a big deal. And if we look at the numbers, because in the February macro tides, I kind of broke it down. If you look at the amount of tariffs that were levied in 2018 against China, it represented 0.32% of GDP. If you accept the numbers that you just went through, 25% Mexico, Canada, 10% EU and China, it represented about 1.1% of GDP. So a significant increase from 2018. And we
So
showed a
that
chart in the last couple of weeks that on the goods that were in fact tariffed in 2018, those prices went up 4%. And what happened was a number of things collectively, kind of damped it down in the sense it wasn't that big of a deal. Psychology, had been very low in terms of inflation because inflation had in fact been low. Companies were reluctant to raise prices in the years leading up to those tariffs. And so all those things muted the effects. And from the Fed's perspective, Blake, they're worried about A, the size is bigger. Secondly, after companies were able to raise prices during the pandemic and consumers accepted it, it means that they're going to be maybe more willing to pass along these price increases, and consumers will understand, oh, the prices are going up because of tariffs. And just as an aside, the amount of imports since October went up almost 9%. So we have actual proof that people are acting in anticipation of the coming tariffs, whatever they may be. So those are all the concerns that the Fed has. And the bottom line is, no pun intended, that the tariff issue kind of trumps almost everything else. In terms of, are they paying attention to inflation? Of course, but they're really waiting for the details.
Okay, and I mean the what you just outlined, and you talk about the jump in tariffs. I mean, the fact of the matter is that's not going to be good for the economy, or is it going to be a boost to the economy because that much more gets shaved off GDP? It seems like, I mean, the market's at all-time highs right now, or near all-time highs, so it
Yeah.
doesn't seem like the market gives two craps about any of it.
Yeah. Well, the one thing I would say is yesterday when he announced that, yep, on February 1st, I'm going to be slapping those tariffs on Canada and Mexico. What did we see? A knee-jerk sell-off in stocks, bonds sold off, the dollar bounced, gold pulled back, and then everybody dismissed it. But to me, it's almost like the way they responded to his statement might be a hint of if in fact he goes through on all these tariffs, that's probably the market reaction we're likely to see. Now it's a question of does in fact he do it? Now, fentanyl is a big deal and it's kind of flying under the radar a little bit relative to tariffs. But I think one of the things that he wants to get out of our trading partners, Mexico and Canada, is a real commitment to cut down the amount of fentanyl flowing into the United States from those two countries. So that's part of the equation. In other words, would he accept a 5% tariff as long as he got commitments that they will definitely work on minimizing how much fentanyl comes into this country, I think, again, the number is going to shrink from 25%. But until we know the details, and we also don't know how they're going to respond. Canada has, been somewhat belligerent. Hey, we'll cut off 4 million barrels of oil we're shipping to you. Canada, has done some other. So my point is, this is the give and take that is going to happen. And, I think the market kind of gave us a hint, given the way it reacted to his announcement. But until we actually hear the news, Apple stock was up $10 today early on in trading. The irony here is in the last 2 years, their sales, I think, are up 1% and it has a PE of 30. I was like, okay, that all adds up.
Yeah, especially in an inflationary environment, it doesn't seem like they're quite really even making money, right?
It's like a utility, I think, for a lot of investors. They know they're going to keep buying back stock. Then I think that's their security blanket, that our downside is somewhat limited. But at some point in time, they're going to have to deliver actual sales growth because ultimately that's what a growth stock is supposed to do.
Right, right. Okay. Well, Jim, let's jump into your charts and let's jump into the first one you brought. Seems like a little deep dive on Deep Seek. What is this first slide about?
All right. Just basically on my website, if you want to read the January 27th weekly technical review, you can go to macrotides.com and click on the Deep Seek Deep Sixes NVIDIA, and you'll be able to read the analysis that I provided this past Monday
Oh,
for
you thought it
free.
was that you thought it was that important where it needed to be published right on your website just for everybody to see.
Why not?
Hey, it's an important issue, so I think that's great that you're doing
Yeah.
that.
The one thing I'm going to say is the CEO of Microsoft kind of said, if prices come down, it's going to spur more demand. In other words, right now there's a small number of companies that can afford to spend $100 million to develop AI. But if the price really comes down, more companies will be able to do that, and ultimately that leads to more demand.
Yeah.
So that's why we've seen this snapback rally, and like in Nvidia and some of the other stocks that got hit, is because it's like, oh, okay, we really don't have to worry about it. The problem, I think, in that really simplistic outlook is that when you go through the period of time when people actually cut back on spending on NVIDIA chips and other stuff, as the cost is coming down, there's a lag time between the cost coming down and when adoption is broad enough to really create that demand flow that he was referencing. So right now, the willingness is just look over any valley whatsoever. If and when that happens, I think people will be less patient.
Okay. All right. And I want to say that this whole situation this week has been a wild one, but it may produce a lot of great competition if truly the case. Um,
Yeah, yeah,
the
which would be a
the
good thing.
Yeah, okay. All right. Well, in that light, your next slide says it's the end of globalization. So, or eras of globalization. I'm
Yeah, yeah,
sorry. I
yeah,
thought
yeah.
you said ends.
What I just wanted to show, again, this is big, big picture stuff.
Yeah.
But, once in a while we have to kind of put in events that are going to happen tomorrow and subsequent days and weeks into a much bigger context. So what you can see is after the Civil War, globalization increased, trade increased, which added to GDP growth. Starting in around 1914, when World War I began, we went sideways for a period of time. And then in 1930, the Smoot-Hawley Tariff Act was passed in the United States. Countries around the world responded in kind with their own tariffs. That act increased the duties and tariffs on 900 different items. And you can see then what happened. Uh, put it in this perspective. In the wake of that tariff act, global trade dropped an astounding 65%. So
Wow.
did it contribute to the depression, make it deeper, maybe longer? Absolutely. World War II and the ramp up in terms of fighting that helped the overall economy. But in terms of global trade, obviously the world didn't benefit from that. Then in 1948, the Tariff Act, Global Tariff Act, GATT, was passed. And what we can see is, and that loosened up and lowered a lot of restrictions, Blake. And what we can see is from 1940 on until about 2010, a huge swing in terms of growth and globalization. It added to GDP growth. Obviously, China joining the WTO in 2001 was accretive to this whole process. But since 2010, we've kind of been going sideways. So, what I showed before, from 1914 to about 1930, you had this sideways, and then protectionism intensified. Well, since 2010, here we are 15 years later, after going sideways, there's evidence that obviously protectionism, restrictions on trade have been creeping higher and have obviously a high likelihood of increasing more. And I think the next chart shows more specifically what we've seen just in the last, as I said, since 2010. Back in 2009, only 1% of imports globally were under restrictive trade rules. In 2016, 4.2%. And then as President Trump did his thing in 2018, we saw again other countries respond in kind. President Biden didn't get rid of any of the tariffs on China and then added his own. And the bottom line is, as of last year, it's 12.9%. So to me, this just suggests that whatever happens with these trade talks, the odds are we're going to see more trade restrictions happen, which is not a positive for global trade, and it will weigh on global growth. And there was a study based, I have this referenced in the February letter, that the tariff enactment slowed GDP growth and how much it impacted GDP growth. There was a modest amount of job losses and so forth. So tariffs are not a free lunch. And ultimately, it's like a hidden tax, because if companies respond by raising prices because their prices from these other countries go up, they're going to pass, X amount of that along. And we're going to see higher prices. Consumers are going to pay. And if they're paying for more of what they need, I mean, I heard a crazy statistic. The amount of agricultural products that we import from Mexico and Canada is very significant. So again, I'm not a fan of tariffs. I didn't vote for President Trump in 2016. I didn't vote for him in 2020 or 2024. And tariffs are part of why I didn't. I will also say I didn't vote for Hillary Clinton, didn't vote for Joe Biden, and didn't vote for Harris.
I think you
So,
penciled in your own name, didn't you?
as a matter of fact, I did. I
That's
figured,
pretty
why not?
narcissistic. That's you're a little bit of a narcissist there.
On one hand, yes. On the other hand, it's a reflection of the low esteem I hold the people that we've been presented
Oh.
for the office, the highest office in the land.
Well, I thought you would have thrown my name in there for fall people. Jeez, Jim. Jeez. All
Next
right, so
time, if we have the same kind of choices, Blake, you're going to be my choice for VP. Okay.
all right, rising
Um,
protectionism. So,
so again, all I want to do is you can just see graphically what's been happening in terms of restrictions against trade. And the ramp that we're seeing here reminds me of what happened in the 1930s. And it wasn't productive for economic growth. And it obviously creates tensions between countries and so forth. So, in the bigger picture, the trend that things have been going over the last 7, 8 years, really going back to, let's say, 2010, has not been positive regarding global trade. And I think we're going to see further deterioration, and that's not a plus.
okay. The next chart you brought is talking about the Mag 7. So explain to
Yeah.
us what this is.
Well, this is just the last 12 months. What, based on the earnings of these companies and the price that their stock is selling at, what is their PE? Broadcom at 66, Nvidia 63, Amazon 40, Microsoft 33. The other 493 stocks have a PE of 19.8. So obviously, these stocks are afforded a gigantic premium because of the growth that they've enjoyed. And it just, to me, underscores the risk to the market if we see growth slow. I've written about how in 2001 and 2, that bear market, the semiconductor index dropped over 80%. In 2008 and 9, the semiconductor index dropped 65%. So in other words, the sector that has the highest valuation also has a high correlation with the cyclicality of the economy. So, um, again, to me, this underscores a risk that certainly may not be realized in the next 3 months, but from a bigger picture standpoint, I just think that people who are oblivious to this potentially could get run over.
Well, I mean, we've seen, I mean, the Mag 7 continues to drag higher. I mean, we got stocks like Meta and Amazon at all-time
Yeah,
highs. You know, I
yeah.
mean,
Well, Meta is considered a beneficiary of Deep Seek because they didn't invest in the stuff that competes with Deep Six. They're basically farmed out the process. So if costs come down, well, that helps them. They want to go into AI full bore, which they have indicated that's their course. But if the cost to do that for them is less than the cost for other companies, that's why Meta has rallied so much, is because they dodged this bullet.
all right. Well, the next chart you brought, Jim, is this S&P advanced decline line. We've looked at this in the past.
Yeah,
What's it telling you
yeah.
today?
Well, again, historically, whenever the S&P makes a higher high and the advanced decline line does not confirm it by also making a higher high, it usually spells trouble for the market. The trouble is dependent on the strength of the reason to sell. So if you get a modest reason to sell, market reacts to the tariffs or whatever it may choose to be. That's how you get 10% declines, Blake. And so this has been a good indicator of signaling and providing a warning that the market is vulnerable to at least a 7 to 10% pullback. If the reason that shows up is much more significant, like, oh my goodness, things are slowing, we're going into a recession, that's where you get 35% to 50% declines. So in 2022, the 80 line in January didn't confirm. Well, got a good reason to sell because the Fed hiked rates and the S&P dropped 28%. 2007, October, same thing happened. S&P dropped 57%. I can go back to 1928, 29 with this stuff. So my point is, this is one of the more reliable technical indicators in terms of the intermediate term, not the very short term. Now, if President Trump comes out and says, we come to a deal and I'm not going to be doing those 25% tariffs, we're going to see the market blow to the upside and the 80 line will likely confirm. So this is a warning. This is not saying, oh, we're absolutely positively about to get a 10% correction. It really will come down to whether investors who are biased to the long side, buy and hold forever, are given a reason to lighten up. And, we don't know. Obviously, this is kind of a unique period in history that we're waiting for this announcement and then all the details to follow in subsequent weeks.
All right. Well, the next chart you talk about TLT, we're getting that bounce that you
Yeah.
have been expecting, I'm looking at it and just from a technical point of view, I've kind of viewed it as a little inverted head and shoulder pattern. But
Hmm.
what are you seeing here that may confirm or maybe
Yeah.
maybe make me question my technical
Yeah.
views? What are you seeing?
Well, again, you can see that low at 89.42. So we're kind of coming up to that overhead resistance in terms of 88.70. All right. The PCE came in, it was higher, but it wasn't like, oh, wow, higher. So if we look at going back the last year and a half, in October of 23, you can see how TLT made a low, bounced, and then went to a lower low. And look at the bottom panel, the RSI registered a pretty nice divergence. The same thing happened in April of last year. A bounce, and then a lower low and a positive divergence on the RSI. So I think there's the potential that there will be another leg down in TLT and potentially dropping below the low we saw 2, 3 weeks ago, mid-January. And if it happens, we'll see, I think, an RSI divergence, and that'll set up, I think, a pretty good entry for TLT in anticipation of lower yields to come. And I'm wanting to be patient because we don't know about tariffs. They will be inflationary. The question is how much? President Trump is going to have to address the budget deficit and things like this. So there's a lot of reasons to say, you know what? Yields could just keep moving up from here, you know. So that's why I want to see this RSI divergence because it provides, I think, a lower risk entry point. Um, so that's
That
my
makes
take.
sense.
Yeah,
Yeah, makes sense. Okay, so here's the dollar. Now I know your ultimate target is below 90.
yeah,
We
95.
we finally are seeing that Elliott wave pattern
Yeah,
try to
it
play
looks like
out.
it
So
completed.
yeah,
Yep.
what's going on here?
Well, and from that high at 110.17, you can see on the daily chart 1, 2, 3, 4, 5. All right. So that to me suggests that at some point in time, at a minimum, there'll be a drop below 106.97. I thought last week that we would see a bounce up to the 108.50. The 618 retracement of that decline from 110.17 is, I think, 108.94. So again, if President Trump announces the tariffs, I think the dollar will have a bounce. And but ultimately, I think this is a bounce that the tide has turned, and we'll see the dollar proceed lower for the next 9 to 12 months or longer. I'm wrong if we really get above 110.17.
Okay.
And is there a risk of that happening? Yeah. I mean, if he goes full bore on the tariffs and then they retaliate, things could get ugly.
Sure.
It'd be constructive for the dollar, but I think it'd be pretty negative for everything else.
So the last chart you brought is gold, and you've been a little hesitant about being bullish gold, but we are at all-time
Yeah.
highs right now. What do you think
Yeah.
about this
Yeah.
move? I mean, is this
Well,
convincing?
yeah, the move has gone far beyond what I thought. I thought we were going to be getting a bounce. We got the bounce, and then the bounce continued. As I discussed last week, just the pattern of way gold has rallied from the low at 25.41 looks very choppy and corrective. And that I talked about an irregular B wave last week, which would allow the gold to trade above 27.89, which it has done so. But that doesn't then preclude that there's a C wave coming that will bring gold down, at least down to the 25.85, and I think potentially below 25.41. But near term, yeah, I thought, yeah, we can get this B wave taking new highs. That's different than telling people to buy it. So in that regard, I've been wrong.
Yeah. Okay. Well, I guess gold will be. It could be very much a product of what happens this weekend as well. I mean, it really could. And now
Yep.
before we wrap things up, Jim, I just want to say, for those of you that didn't or maybe missed it a little bit earlier, you have an offer where people can go to your site and get the most recent technical review. Correct?
You got it. Macrotides.com.
All right, yeah, and so you can check out Deep Sixes,
NVIDIA.
Deep Sixes NVIDIA. Got it.
Yeah,
All
I
right,
thought that was kind of funny. I mean, I'd like coming up with that title in a way. The idea of deep six something,
that's
guess
very
that
clever of
just
you, Jim. Very clever. Very clever.
a little alliteration. Deep this,
Some,
deep that.
somebody's seen too many submarine movies in their lifetime, I'm going to say. No,
Some
but
great
Jim,
submarine movies.
I think that's great. And I know people are probably well, they are watching this after the weekend. Hopefully, I know in our community we've been talking about all week just to make sure you keep your positions at at a very little minimum.
Yeah.
If anything, it's going to be better to react over the weekend. I'm sure many of you are already consuming some of the headlines that have come through the market. So trade carefully next week. It'd be my suggestion for you all. Jim, you have any wise words before we wrap things up?
No, I think that's very sage advice. Trade small, have low exposure, because quite honestly, none of us knows how this is going to play out. I think, again, let's look at the Colombia experience where President Trump said, okay, you're not going to take my airplanes that are bringing, people we've deported back to your country. And, all of a sudden, oh my God, look at coffee, and then the guy caves, in an hour. And I think there's some maybe suspicion or hope that Mexico and Canada will behave the same way. And at the same time, maybe President Trump is like, hey, it worked with Colombia. Why don't I try to strong arm Canada and Mexico? So, again, to your point, have smaller exposure and let's wait to see how this shakes out. If it's going to be meaningful one way or the other, that means there will be a trend that will ultimately develop, whether it's up or down and whatever the market. So missing the first part of that move is not the end of the world.
And Jim, I told people even this morning, as early as this morning, I mean, if you think you probably don't. This is a
Yeah.
very Trump is a wild card, and his administration is they don't mind surprising everyone.
No.
That's what their intention is. So, um,
Yeah.
you
No,
know,
I mean, they've been very bold in the things that they've done across a whole range of
yeah.
issues, right? And I think the clock's ticking. The one thing I will say is, again, whether you like the guy or not, in 2016, he really wasn't prepared to be president. And I think what we've seen in the last 2 weeks is the preparation was significant. The talent that he lined up, was uh, well researched ahead of time. Again, whether you like him or not, the point is that I think he's running, the starting gun went off and he's already at the sprint mode and he hasn't slowed down. He does his usual things like he did yesterday regarding the, collision and plane crash and then going off on DEI. I mean, it's like, Donald, you just, that was just, in my view, inappropriate. Have that conversation some other day, but not on that day. But that's Trump, But anyway, he is a wild card, and he knows that, and I think he tries to use that to his advantage when he's in negotiations with people.
Absolutely. All right, Jim. Well, I want to say have a great weekend. Thank you for spending time with us. As always, if you enjoy what you heard here, do three things. Subscribe to the channel. It's free to subscribe to the Trader Summit channel. It's free to jump down in the comments and tell Jim how you feel, things you're looking at, have a little debate. And it's also free to give him a big thumbs up and thank him for being here every Friday. So, Jim, I want to give you a big thumbs up for being here and appreciate you. And I'll look forward to catching up next week because it's going to be another hell of a week, I'm sure.
Well, here's a big thumbs up to you, Blake. All
Thanks.
right, thanks, buddy.
All
Have a
right,
great
you got a
weekend.
little frog. I gave you the frog. All right, Jim,
I know, it finally got to me from Phoenix,
have a wonderful week, and we'll catch you
You
next week.
got it. You got it. Thank you.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.